Hey, this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now. Go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. You can see that here since around the 15th of March 2012, that price has continued to work its way down. It may go in a range sideways for a while, goes down sideways for a while, and now as we see it trying to push down, you can see that this trend line is continuing to hold since April 20th, down, 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 down. I did take a couple buy positions down here around the 77.50 range and pulled some profits out, but right now you can see that price is the wicks, not the wicks, I apologize, the candles are getting smaller and smaller. And this trend is continuing to hold. I'd be looking to sell this pair, especially the fact that we are looking at US dollar weakness, and I expect US dollar weakness for a good several months from now. So I'm actually looking to sell this pair around this range here over the next day, and it looks like this thing could hit here very quickly, which is right around here-ish, which is what, 78.65 range. Of course, I would put my stop. Obviously, we have to put our stop above this trend line, but it's not just a trend line. We also have some key levels here, one being the 7,900 range. So I'd probably put the support, the stop of 20 pips above the 7,900 range, and then sell, and I'd be looking at a profit target here and below. And probably on this one, depending on if we get this thing to run down into a whole new channel, that we may want to let this trade run for a little while until it gasses itself out. We talked about that in some of our other videos about how you close out partial positions in a trade until it completely gets stopped out in profit on the remaining lots. But anyway, let's go check out another trade, another currency pair, and see what we've got going on. All right, the pound dollar. This is the pound dollar daily chart, and you can see here that the pound has had tremendous strength against the US dollar. In fact, we've moved up almost 800 pips since August, beginning of August, so we're talking about it in just a few months. And we've had a pullback from the 16300 mark here all the way down to the 160. Now, what we've seen over the last few days is we've seen a changeover here. We're starting to see more momentum again against the US dollar. What we don't know up until this point is whether it's going to hold. Whether this is going to be a fake reversal, people are going to start buying, and next thing you know, it tanks down, or if this thing is going to continue to hold. So I'm going to be watching price very closely on this one. I'm not going to enter this trade quite yet because I'm not sure if this thing breaks through this level. I'm expecting to run down to 15700 range. If this level can hold, then we should expect to run up at least to the 16300 range. All right, so for the last pair we're going to look at today is the New Zealand dollar, US dollar. Now you can see since around June 1st that price actually tested this 74.50 level twice, hit it, and then shot up like a rocket. 900 pips in a matter of 4 months. That's a pretty strong movement. And in fact, you've seen most pairs rally very strongly against the US dollar. But one thing I'm looking at this on this pair is over the last 2 weeks, we're starting to see some rejection. And look at the wicks. You can see when price is really moving up, the strong wicks. You don't have a lot of wick on the bottom. It's pushing, but now you're seeing that the wicks are lengthening as they go, and a lot of the body of these candles is pushing near the bottom. What that's looking at is that there is a serious depletion of bullish momentum. I wouldn't say that there's a bunch of this price push down is sellers rejecting the New Zealand dollar, US dollar long position that they're pushing short. What I am looking at is that it's gassing out. After a 900 pip push, though it has had some ups, and then you get some retracements, ups, some retracements, and then ups. And now we're in a retracement here. In fact, from this swing here to swing here, you can see here we have our price is really running down, leveling out right above the 50% retracement level, the Fibonacci retracement. And what I'm seeing here, though, is what we're trying to determine is the price going to hold here? Because this thing has continued to just push back, give me false signals that we're going to go up and continue to pull back. But with these rejection wicks, we may see a deeper level retracement on this pair, so I'm going to be very careful. But what I would really like to see is that this trend line would hold and watch the price continue moving up. So I'm going to be watching that. So anyway, that's it for the market preview. Feel free to leave any comments, and we'll give you more updates this week. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.